Hi traders, this is Steve Miley, market chartist for FX Explained, and this is our regular weekly MacroWatch, looking at the week commencing 27th April, recapping last week's major geopolitical and macroeconomic developments, and also what's been going on within the financial markets. So the COVID-19 deaths in here starting to plateau in Europe and also to some extent in the US, which is definitely a positive for financial markets. And then also the number of cases falling in some cases in Europe and also plateauing again in the UK and the US. So positives to be taken there, certainly. Lockdown rules in some European nations and also some US states are starting to be relaxed in here as those number of deaths and the number of cases plateau and fall. So hoping in here for some kind of restarting in the global economy in coming weeks. So we're going to be monitoring that certainly closely. On the data front in the past week, another big number in here for unemployment jobless claims in the US, 4.4 million in the last week, and now 26 million now US unemployed since the lockdown began in March. Data also worse than expected with the PMI data globally in here from market purchasing managers index data for April, flash data, certainly more negative across the board than expectations in here. And also the trial of the drug from Gilead in here, certainly not proving to be as successful as we'd hoped, with further trials in here signalling potentially that this drug is not a successful treatment for COVID-19. Let's have a look now at the global financial market developments. A big sell-off in oil in here at the beginning of the week. Partly a technicality in the futures market going below zero for the first time ever. Trading as low as negative $40 in here. Minus $40 for the front month on the light crude oil future. Now that was partly because of a technicality, but it also reflects the lack of storage facilities. The fact that currently we're seeing now storage facilities getting very full as we're seeing a lack of global demand for oil during lockdown. That sent European and US equity indices slightly lower. We're looking at the DAX in here, but over the past week we're seeing more of a consolidation theme, having had that strong push higher for global equity indices on the rebound initially in March, and then another strong up leg in April. European US equity indices more sideways in here over the past week as we're struggling to look at the differences between the impacts from the plateauing of the number of deaths and then weighing that with what happens if we come out of lockdown. The US dollar index in here is going higher. So as we've seen that the European and US equity markets stop going up, we've seen more of a cautious tone on that phase. Not necessarily in risk off mode, but the dollar strength in here certainly reflecting the fact that markets are in more of a cautious phase with the US dollar rallying as a safe haven. And gold also rallying despite the fact that the US dollar has gone up. Normally that would see gold lower, but the US dollar going higher in here alongside gold. So again, gold potentially rallying back up close to those multi-year highs set earlier in April, potentially as a safe haven bet. And finally in here we're looking at copper, another mixed message. So copper rallying as well into the end of this week. Again, that's despite the fact that the US dollar was stronger across the board. Copper rebounding in here, maybe reflecting a more positive outlook for the global economy. So certainly mixed signals in here over the past week from the various asset classes as to the future path of assets going into the end of April. So let's take a look at the week ahead now, week commencing the 27th of April. What have we got coming up? Well, let's start on our central bank watch first of all. Bank of Japan on Tuesday, the US Federal Reserve Open Market Committee on Wednesday, and the ECB European Central Bank on Thursday. So the major three central banks globally in here all meeting this week. Obviously, we're not particularly expecting anything on interest rates, but it'd be very interesting to see what they have to say potentially on quantitative easing and further support for their own economies and for the global economy. We also are going to be monitoring the data with respect to the COVID-19 global spread and the plateauing of that data on cases and deaths, and also any developments from various nations on their lockdown procedures. And finally, we have earnings season continues on Wall Street and also in Europe in the UK. Notes this week are going to be Google, Pfizer, Merck, BP, Facebook, Tesla, Boeing, General Electric, GE, Shell, Apple, Amazon, ExxonMobil, and Chevron. So a big data week in here on the earnings side. As of yet, earnings have not really impacted too much on the major indices, but it's a huge week in here for both these big tech stocks, these big FANG stocks, and also for some of the big dividend stocks. On the macroeconomic data front, we've already spoken about the various central bank meetings. We also have US consumer confidence on Tuesday. We have German CPI and US GDP on Wednesday. Chinese PMI on Thursday, alongside German unemployment and Eurozone CPI. And then we finish off the week with the US ISM manufacturing PMI. And do remember that on Friday, many European markets are closed for their national holidays, 1st of May. I'm going to wish you all a great trading week. Please be safe out there, be careful out there, look after yourself and your loved ones, and I'll be back with you for another Macro Watch next week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.